Ladies and gentlemen, let me be real with you. Markets don't just collapse overnight. They whisper before they scream. They give you signs, warnings, and red flags long before the crash ever makes headlines. But here's the painful truth. Most people don't see it, and the ones who do often don't take it seriously. And when the storm finally hits, those who ignored the whispers are left broke, confused, and wondering how it all fell apart so fast. Now, what we're about to talk about isn't just another financial lecture. This is about survival. This is about understanding how power, policy, and panic collide to create moments in history where fortunes are destroyed in the blink of an eye. But here's the other side. Those same moments also create opportunities, life-changing opportunities for the people who are awake, alert, and prepared to act while everyone else is frozen in fear. So, if you've been treating the stock market like a casino, hoping for luck, it's time to wake up. Because when the crash comes, luck won't save you. But knowledge, preparation, and discipline just might make you richer than you ever imagined. Every single market crash in history has left people saying the same words. Nobody saw it coming, but that's not true. Crashes don't happen in silence. They don't arrive like a thief in the night with no warning at all. They build up slowly, stacking red flags one after another until finally the weight becomes too heavy and everything collapses. The problem isn't that the signals weren't there. The problem is that most people either ignored them, underestimated them, ate, or chose to believe the good times would last forever. If you look closely at the warning signs before any major collapse, you'll see the same patterns repeating. Rising debt that no one wants to talk about, policies that push short-term growth but ignore long-term consequences, asset prices shooting way beyond their real value, an economy that looks unstoppable on the surface but is cracking beneath it. These are the whispers of danger, and they were all around before this latest crash. The issue is that the average person doesn't know how to listen. Why? Because optimism is easier. When everything is going up, when jobs are booming, when the stock market is setting records, it feels good to believe that the ride will never end. Nobody wants to be the one saying, hey, maybe this is too good to be true. People don't like hearing about risk when they're making money, so they brush off the warnings. They dismiss the critics as negative, and they keep piling in, believing the party will last forever. But history shows us it never does. The wealthy, the experienced, the seasoned investors, they read the signs differently. They know that the market always gives you signals. They don't get blinded by optimism because they've seen this movie before. They know that when credit gets too easy, when everyone is rushing to buy, when speculation becomes the norm instead of the exception, a crash is not just possible, it's inevitable. Think about it. How many times have people been told, the 48, this time is different? During the housing bubble, they said home prices would never go down. During the dot-com boom, they said technology stocks would only rise. During every single market high, people convinced themselves that the rules have changed. But the truth is, the rules never change. What goes up too fast without real value beneath it always comes crashing down. And yet, even with all the warnings, most people don't prepare. They ignore the debt numbers. They don't pay attention to inflation creeping in. They miss the warning signs in corporate earnings. 8, they think government policies will save them, forgetting that policy can't stop gravity. The wealthy, on the other hand, are watching closely. They see when markets are overheated, and instead of ignoring it, they adjust. They cut back on risky assets. They move into safer positions. They hold cash. They prepare. So when the crash finally comes, the average person says, how did this happen? While the wealthy are already waiting with money in hand. 8, ready to buy assets at a discount. The signs were there for everyone, but only the ones who were disciplined enough to see them and act on them made it through stronger. That's the lesson here. Crashes are never surprises. They are the results of ignoring reality. The hidden signals aren't really hidden at all. They're in plain sight. The real question is, are you willing to see them? Or will you convince yourself that everything is fine until it's too late? Because ignoring those signals has a cost, and that cost is your future. When markets crash, people often point to the numbers on the screen, the falling stock prices, the collapsing indexes, the billions wiped out in hours. But the real destruction doesn't come from the crash itself. The greatest wealth destruction comes from fear. 8. Fear turns temporary losses into permanent ones. Fear takes a setback and makes it a disaster. Here's what most people don't understand: markets move in cycles. They go up, they come down, and they up again. History proves it every single time. If you zoom out on a chart of the stock market, you'll see crashes that felt like the end of the world in the moment, yet over decades, the market kept rising. The ones who stayed patient, who didn't let fear control them, came out stronger. But the ones who panicked, they sold everything at the bottom, locking in their losses, and missed the rebound that could have rebuilt their wealth. That's the psychology of fear. When the market drops 10%, people get nervous. At 20%, they panic. At 30%, they sell. They convince themselves that this time it's different. They imagine the world is ending, that the system is collapsing, that there's no way back. But that's exactly how markets have always worked, testing your patience, testing your nerves, and rewarding only those who stay disciplined. The wealthy understand this game differently. When fear grips the crowd, they see opportunity. They know that every crash creates discounts. They don't see red screens as a reason to run. They see them as a giant sale sign on assets they wanted anyway. They buy while others are running for the exits. That's why the saying goes, when there's blood in the streets, buy property. It's not just a clever quote, it's the mindset that separates winners from losers in times of crisis. Think about the 2008 financial crash. 8 million of people sold their homes, their stocks, their retirement funds because they thought the world was ending. But those who held on, or even better, those who bought during the chaos, saw their wealth multiply in the years that followed. The market recovered, as it always does. 8. And the ones who stayed calm walked away wealthier than ever. Fear stole wealth from the majority and handed it to the minority who were patient. So why does fear have this kind of power? Because money is emotional. People don't just see numbers falling on a screen. They see their dreams, their future, their security slipping away. That emotional connection to money makes rational decisions almost impossible in the middle of a crisis. Instead of asking, what's the smart move? People ask, how do I stop the pain right now? And selling everything feels like relief in the moment, but it guarantees regret later. This is why mindset is everything. You can't control the market, but you can control your reaction to it. If you let fear dictate your choices, you'll always lose. But if you develop discipline, if you train yourself to zoom out, to think long term, to see opportunity where others see disaster, you can turn the very thing that destroys most people's wealth into the foundation of your own. Remember this, fear is temporary, but regret lasts forever. The market will always recover, but if you sell at the bottom, you won't. The crash doesn't wipe you out, your reaction does. If you can master your emotions, you can master your wealth. When a market crash hits, most people act shocked. They scramble, panic, and start asking questions they should have asked years before. But the truth is, the smartest investors never wait for the storm to hit before they prepare. They build their strategies in advance. The forte. They plan when skies are clear so that when the thunder rolls in, they're not scrambling, they're ready. Preparation is the difference between surviving a crash and being crushed by it. The average person puts all their money into one basket, maybe a handful of hot stocks. 8, maybe just a retirement account they barely understand. They cross their fingers and hope for the best. But hope is not a strategy. Smart investors know better. They spread their money across different asset classes, stocks, bonds, real estate, commodities, and even cash. This diversification is like building walls around your financial house. One wall may get hit, but the whole structure won't fall. And it's not just diversification, it's also about liquidity. The smartest investors keep cash ready. Why? Because they know opportunities are born in chaos. When a crash drives prices down, cash becomes a weapon. It allows you to buy quality assets at a massive discount while everyone else is forced to sell. Think of it like a fire sale. The unprepared are the ones selling their valuables in desperation, while the prepared are walking through the store, picking up bargains for pennies on the dollar. Another thing the wealthy do before the storm is reduce risk. They don't get carried away by hype or speculation. When markets are hot and everyone else is chasing the next sure thing, they quietly step back. They trim risky positions. They lock in profits. They protect what they've built. That discipline is what keeps them standing strong when the storm hits and everyone else is wiped out. Smart investors also study history. They understand that crashes are not if events, they are when events. Every market has cycles of boom and bust. Instead of pretending that growth will last forever, they plan for the inevitable downturn. They look at patterns, study past crises, and use that knowledge to position themselves. They know that just as winter always follows summer, a market crash always follows a boom. And because they expect it, they never get blindsided. But perhaps the biggest difference is mindset. While most people let emotions control their decisions, 8. The prepared investor relies on discipline and patience. They don't chase every trend. They don't get greedy when everyone else is making fast money. And most importantly, they don't panic when prices start falling. Their preparation gives them confidence. They know exactly what to do, while others are paralyzed by fear. This is why every crisis ends up widening the wealth gap. The unprepared lose everything because they react emotionally. 8. The prepared grow wealthier because they position themselves to seize opportunities. It's not luck, it's preparation. And that preparation starts long before the first headline screams, "See your ace!" So here's the truth. If you want to build lasting wealth, you can't just think about sunny days. You have to prepare for the storms. You need to diversify. You need to build cash reserves. You need to study history and stay disciplined, because the market doesn't forgive ignorance, but it rewards preparation in ways that can change your entire life. When the next storm comes, and it will, the question is simple. Will you be one of the panicked sellers, or will you be the calm investor walking into the chaos with confidence, ready to buy? The answer depends on what you do right now before the storm even begins. Most people hear the word crash and immediately think of destruction. They picture lost jobs, falling portfolios, evaporating savings, and years of hard work wiped out in an instant. And yes, a crash can be devastating if you let it. But here's the other side of the story. For every person who is broken by a market crash, there's another person who becomes wealthy because of it. The difference isn't the crash itself. 8. The difference is perspective. A crash is simply a reset. It's the market clearing out the excess, punishing the reckless, and rebalancing after years of unsustainable growth. On the surface, it looks like chaos, but beneath that chaos lies opportunity. Opportunity so big that fortunes are built on it. 48. Some of the wealthiest people alive today made their biggest moves during times of panic. They weren't lucky. They weren't smarter than everyone else. They were simply prepared to act when everyone else was too afraid. Think about it. When stock prices fall 30%, 40%, even 50%, most people panic and sell. They can't stomach the red numbers, so they lock in their losses. But a disciplined investor sees the same crash as a fire sale. Assets that were overpriced yesterday are suddenly on clearance. Great companies are trading at half their real value. Real estate, commodities, 8, even entire sectors are suddenly affordable in ways they haven't been for years. That's not destruction, that's opportunity knocking. History proves it. After the Great Depression, those who bought into the market when everyone else had given up made fortunes. After the 2008 financial crisis, investors who bought real estate and stocks at rock bottom prices saw their wealth multiply within a decade. Even the pandemic crash of 2020 showed the same pattern. While panic sellers ran for the exits, prepared investors scooped up bargains and rode the recovery to massive gains. So how do you turn a crash into your opportunity? First, 48. You need courage. It takes guts to buy when everyone else is selling. You'll feel like you're walking into a burning building. The headlines will scream disaster. People around you will say you're crazy. But that's exactly why opportunity exists, because most people run away from it. Second, you need preparation. 8, you can't seize opportunity if you don't have resources ready. That's why smart investors keep cash reserves. They don't tie up every dollar in assets during boom times. They hold back, knowing that the storm will come and they'll need ammunition when it does. If you're broke, when the crash comes, you'll be forced to sell, not buy. Preparation is what flips the script. Finally, you need patience. A crash doesn't turn into riches overnight. It takes time for markets to recover. But if you have the discipline to hold, the rebound will reward you. That's why the wealthy get richer in downturns. They're not just buying cheap, they're willing to wait until the true value shows itself again. So here's the truth. A crash doesn't decide your future, you do. You can let fear control you, sell at the bottom, and spend years regretting it. Or you can keep your head, see the opportunity, and make moves that could change your entire financial life. The choice is yours. Remember, these fortunes are not built during the good times. They're built in the downturns when courage, preparation, and patience meet opportunity. The next crash isn't something to fear, it's something to be ready for. Because it might just be the moment that changes everything for you.